I guess it's supposed to wake up the earthworms, and they'll start crawling around on top now. So I guess that's good for fishermen, earthmen. So VITA, we've got 3 more weeks. Now, Hillary, I think you're live streaming. You've only got 20 return. We've got 3 more nights. If you do 5 a night, that's just 35. You need 50. And Jonathan's already got how many? Jonathan's got 45. He only needs 5 more to meet minimum requirements to get an A out of the ITA.
Technically, I have over 50, but the reviews.
Well, we've really been bad on reviewing this year. We didn't have enough people. I usually count 2 reviews as a return. Now, Savannah last night, she did that ladies with 3 rental properties. Now, I'm doing Missouri. He has 3 rental properties. But you got to separate out utilities for all 3. That's water. Missouri pays the water, the electricity, taxes on all 3, repairs and maintenance. It takes a while, and I guess what I'm trying to say, I will count hers, that 1 return double. Now, situations that arose last night, other than doing a real estate return, we had a guy with 1099 miscellaneous, which is Schedule C. All right. And we give him expenses for gas going to and from work. Now, if you were a plumber and you've got an office at home or no office, you can take your mileage from the time you leave your front door. You're going to a different place every day if you're a plumber. Or if you're an appliance repairman or a TV repairman. Well, if you go to the same spot every day, that's not really, you're not supposed to get gas mileage. These people come in there and you feel sorry for them. They're whining that they owe IRS already. One guy did. Savannah took too much time on his return. And other than that, things went well last night. We did 35 returns with 5 people. And Sarah wasn't feeling great, and Savannah got bogged down on 2 returns, but we still did 35. And one guy, he didn't have an appointment. I turned him away, made him an appointment for later, because we were just too busy. We had a couple other walk-ins, just little complaints about past returns. Now, Cole, you got a problem. You've got 3 returns that's been rejected. You had 4. Sarah straightened 1 out. We cannot have any rejected returns by April the 15th.
When I looked last night, I had 1, but Savannah was supposed to go home and look at it. It was something to do with the social and the birthday of, because the woman was born in 1943 and her son was born in 1960 and he's disabled. So that would make her 17 years old when she had him.
That's possible.
Perfectly possible.
Yeah.
And that's what I was confused about. And she said I might have made something wrong with the social, so she was going to go home and pull up last year's, theirs from last year, to make sure the numbers match.
Well, if we don't have a correct birthday, we're going to have to call her about the birthday. But now, Sarah had 1 that went through when the woman's birthday was off 2 years. That was that little lady up there. It was her mother's that she was getting done. She's had them done here for 10 or 12 years. Now, next year, guys, you can still do the ITA if you need it for an internship or if you need it for an county elective. How'd you do yours this year, Cole? As an elective? Jonathan, you did yours? You can do it as an internship next year. So you can do it 2 years in a row if you want to.
Are we gonna have it next year?
Well, Jonathan, I don't know. Sarah's going to be gone. She's been my right-hand woman. She oversteps her bounds sometimes. Hey, Sarah, did you hear that? But she's good, though. She can iron out some of the problems. Uh, if I retire in December, a new person would have to get trained. And it would be hard. They could. They'd have a month of January to get trained, get set up. The IRS man in West Virginia, Charleston, would help. But I hate to see it drop. But we help
Sarah
out.
said something about if she goes and gets some kind of degree, she could probably pick it up. But would you have to be a teacher at the college, part of the faculty at the college to do it?
Well, when I took it over, another accounting professor had died, Bill Goodwin. And see, I was here in '79. And Kent Poff took my place, one accounting instructor. And Kent Poff, he moved on, and they added the accountancy program, and they hired two accounting instructors. Bradbury was in a wheelchair, and Goodwin. Now, I met those guys when I went to a tax conference at Virginia Tech. Bradbury, I think he went to a community college, and Goodman died. They hired different people. They hired some fella, and I think he sued the college over something. Then another fellow was here when I came here. He was a PhD in accounting, and he was pretty good. He left a year after I got here, and then when we advertised for a position that Mr. Imel got, this fellow applied. He wanted to come back. But when they quit like that, sometimes you don't get back. I know I quit in '79, and the provost called me. So I know you got to drive, and I can't give you a raise this year, but I'll make it up to you next year. But anyway, when I retired from community college, I called Dr. Bourne, and I knew the provost. He was my dean at community college, and I just wanted to work 1 year. 1 year, that was 9 years ago. And every year something came up. We advertised for jobs, and we couldn't get anybody we wanted, so I came back. Well, that Mr. Trill, his name was Trill. When he quit, I came back. So hopefully I can get out of here in December. Give Mr. Imel time to try to find somebody. This year it worked out good with Mr. Imel being dean. He still taught a couple, 3 classes.
See, if he took it over, would it count as a class?
What now?
If I'm able to take it over, would it count as a class? Like him teaching a class? Because I know he's only allowed so many.
All right, he could take it over for free if he wanted to. Or if he needed it as a class, he could count it as a class. Now, Michelle Taylor's husband's teaching some of the stuff for us. He has a master's in accounting, so he should know his stuff. Once you get a master's in accounting, there's not a whole much more to learn, but you can get a PhD in accounting. But PhDs, a lot of times, it's a title. Don't mean they're a good teacher. We've had a couple here, they had PhDs, but we're not good at teaching. So, but anyhow, the courses we have here, they qualify for the CPA. And I was looking at West Virginia CPA. They had about 8 in West Virginia that passed CPA last year. But there's so many good accounting jobs out there, whether you never pass the CPA. Now, Sarah's going to take the enrolled agent. Mr. Imel and I are enrolled agents. Now, that gives us the power, the same as an attorney, to represent a client all the way up to the Supreme Court. And it's a test just on taxes, a 2-day test. One test is on individuals, which I think after this semester, most of you can pass that. Another one is on business corporations. And what we're talking about today on selling assets that are business, that will be part of it. Corporations, we will get to that, that'll be part of it. Sarah, I think she could pass the individual hands down.
What, Sarah?
I'm saying you could pass that enrolled agent, the individual.
Anybody want to go work
down.
for H&R Block? I brought these for you just to laugh.
Now, this is a laugh. One lady took this test and she wanted us to give her credit over here for taxes. We would not. Now, if you take their course, they'll employ you. I don't think they paid all that great, do they?
I don't think so. According to this, you get H&R Block certification, certificate of completion, qualifying education hours, 3.5 hours of recognized credit with the University of Phoenix. Curriculum includes introduction and course overview, wages, income and taxes, filing requirements, dependent acceptance and support, dependent related filing status, interest and dividends, itemized deductions, earned income and due diligence, other income, adjustments, credits, education credits, retirement ethics, practice, and review and exams.
That's what it says here. Wages, income, filing requirements, dependent exemption, filing status, dividends, interest, itemized earned income credit adjustments, credits, education credits, retirement, ethics, practice, and we've done all that. But nowhere on here does it say small business, a Schedule C, or rental property, or 4797 property, which we're studying now. Nowhere does it say any of those.
No. And there was a girl, if you remember, in my first year, my personal tax, that was taking that same course concurrently with this, or is that at the same time, whatever that means, whatever what that is. She took it at the same time as our course. And she said she learned more in the first week here than she did in the whole 6-week class there.
So when I was teaching tax at community college, the lady still, one of my former students still owns the H&R Block in Richland. She made a year-round practice by adding bookkeeping year-round. So she does a lot of payroll for companies, and then she's got some corporations that she's got closing out at the end of June, or at the end of September, or at the end of November. I trained the lady in Tazewell at H&R Block. Now, the one in Grundy H&R Block, I didn't train, but here's what she did. I had a tax office in Buchanan County at that time. I ran on the side. I had a full-time employee and a full-time secretary. What in the world? A bobblehead?
Bobblehead pen.
Sarah, you're going to take the enrolled agent exam, right?
Yes, I am. Actually, everybody asks, what are you going to do after graduation? I didn't get any of those. And I'm like, I'm going to graduate first. But you and I started talking, and you said this area needs somebody that go around house to house. That would be a great opportunity. So what I'm going to do is I'm going to get my enrolled agent. I actually talked to Philip about this. And then he's going to help me get the software. Huh? My Philip, not Mr. Imel. Mr. Imel is Mr. Imel.
Well,
And then I'm going to do that.
Software, just get the home and business, TurboTax. Do not get the basic. do not get the
Yeah.
premier, get the home and business, it takes care of small business. Now, if you want to do corps and partnerships, that's another program. But, Sarah, you can pass
I think
the,
I'll have no problem with
you
it.
can pass the, individual part of the,
I think where
you
I
will
would
have to study
trouble,
some on courts, look over
and you know who I'm
partnership.
gonna call, right?
Who?
You.
Okay,
He's like, no, you're
but
not.
you can pass that. It's a 2-day exam. You can pass.
Yep. And you can take, and if you fail it, you have up to 3 more attempts before you have to take them all over again.
Yeah.
So I read it all. And then maybe later on, I'll go and get my CPA. Enrolled agent is just where I want to get right now. So I have that. But in the future, I may get a CPA. I may not.
Enrolled agent is just credential if you do taxes. Now, the H&R Block in Grundy. I had a partner in my tax business, and he stopped in a little zip-in market one morning. And he knew enough about taxes. He had my tax prices. And he looked over their return that H&R Block had done. And he taught that lady in the store owner to bring it to me. Well, right away, I looked over and checked off 30 mistakes H&R Block made.
Hi, I did somebody through here and had to do their previous returns.
I had somebody at my work come to me, say she don't think they did their taxes.
Did you come over?
I told her to bring me the other stuff, bring me her stuff, and I would do that. So if she's already got her money.
Yeah.
If they didn't do it right.
You can amend it. Trying to mail that in. Also, if you guys want to drive around, they have a big meet in Tazewell County. It's $15 an hour.
What?
To drive around and check to make sure addresses are correct.
Make sure what?
Addresses are correct for the 2020 census.
Oh, census.
Yes.
Address.
It's $15 an hour, plus if you're driving, you get mileage. I can make copies of this.
We'll get started with taxes in a minute, folks. So anyway, we corrected that H&R Block return. And it was not e-filing. She hadn't sent it in yet. And we corrected it, saved her about $8,000. And I told her to take that back to H&R Block and get her money back. She took it back, but they asked her, they had to have her copy of the return, but they gave her money back and so forth. But H&R Block used to advertise that they guaranteed stuff. They were only guaranteeing arithmetic, math, and their computers were taking care of the math. That didn't mean they were putting everything in there right and giving you the right deductions. But
I went to Jackson Hewitt after I had my first tax class back in 2004. And I had everything prepared, but I wasn't sure if I did it right. Plus I wanted an e-file. So we took it into Jackson Hewitt because they were the only, H&R Block would not allow you to bring it pre-done. She's like, I can charge you less at Jackson Hewitt because I brought all the work in, they just have to plug everything in. She's like, you did this exactly right. She's like, why didn't you just send it? And I was like, well, e-filing's quicker. So I paid like a fraction, but H&R Block wouldn't do that. Jackson Hewitt did. And while I was in there, I overheard some guy saying on uniforms, he was talking about his jeans, his sneakers, his underwear. He's like, because I wear them into the kitchen, I can't wear them outside because they smell like food. That's not considered a uniform though.
a uniform usually has the place of business's name on it.
Or it's something that you have to buy that can only be used there. Like my ex-husband's dad worked for a mining supply company. They had to buy specific boots. Those boots, he had to get one new pair every year. They were about $200 to $300 a pair. You could write those off because they were specifically for that.
All right, Jonathan, hold on a minute. A miner, I would give him hard-toe boots. I would give him his mine hat. I would give him his light. But his clothes, IRS argues that they were old clothes that he adapted to mine.
That was stuff that you could wear outside
But
of the business.
if you can't adapt it to streetwear, now a entertainer, a performer, they can take off all their fancy clothes. Dolly Parton could take off
And her wigs.
You know, probably even her wigs. Maybe. Dolly Parton probably finds a way to take off her facelift.
I read somewhere, it's like these YouTubers, anything they use in a video to make like entertainment, I've heard they could write this.
Oh, yeah.
Not everything.
In a video.
A
In a
lot of
video.
it.
If you had to buy new outfits for video, yes. But Jonathan, in your case,
Money.
do you have to buy a Food City anything?
Sure,
Do
you
I
said.
have to?
Yeah, you don't have to.
I mean,
Do you have to have something like a Food City
yeah.
logo
I have
on your
to,
clothing?
sure.
Okay.
All right, but Jonathan, you have to itemize. You have to put that on 2106, and then you take out 2% of your adjusted gross income, and whatever left is itemized deduction. So
It's
your
not
uniform
worth it.
costs won't qualify you for anything.
No, it's when you make more money and you have more itemized deductions like medical. Medical is a really good one because you can actually use over-the-counter medications and stuff. Anything in HBA, like Tylenol, if you buy Tylenol, if you have a lot of medical bills, to add into that, you can use Tylenol, ibuprofen.
But you have to have a lot of medical bills. Now, health insurance. My daughter pays $1,200 a month for family health insurance policy. Well, that's 12,000 plus 24 more hundred. That's 14,400. Now, if her husband makes 100,000, you take out 7.5% of that 100,000. That's 7,500 deducted from her 13,200. She still gets medical deduction.
Yeah.
And
Then they add in then you add in all their prescription medications that they have to buy every year.
dental, doctor,
Glasses.
crutches, wheelchairs, special ramps, possibly even a swimming pool if a doctor prescribes it.
Anything a doctor can prescribe. Like I get even vitamins. Like if you go to the store and you just feel like, you especially need to go buy this. It's called vitamin C. Buy their 500 milligram tablet or 1,000 milligram tablets. Take 2 a day. It'll keep you from getting sick. And zinc. No more than 25 milligrams a day because it stays in your system. But take those every day and you won't get sick so much.
All right, now Sarah, one thing you said I'm not going to agree with is that any medicine you buy at your drugstore, no, it has to be prescribed.
Actually, it actually says over-the-counter medications. It does not
If it says
specify.
that this year, then they've changed that. If it says that.
It said it last year and the year before. It said over-the-counter medications
Right.
because you don't need a prescription.
Have
doctor
you got
just
one of
has to
those
say.
publications 17?
They're all upstairs. If one of you guys wants
You
to.
get a change, look at it. Show me. All right. But anyway, Sarah can pass the individual part, but Sarah, review corporations.
Yeah.
I have a
The
question.
only book I have a review with though is mine from 2015.
Sarah, online, you can read anything you
I
want.
know. What's your question?
If I bought a computer
Yes.
and my mom claims my 1098
Yes.
will it go on hers?
Yes.
Yeah, that's all intuition. However,
You have
for
to
that first
check.
credit, what is it, tuition?
You have to check it. Do you have the book on you? I do have
Now, I
mine.
know it would qualify for lifetime learning credit.
Yeah. You have to check, because lifetime learning covers a lot more than Hope Credit.
The opportunity,
Yeah,
first 2 years.
yeah, the American Opportunity. I still know it as the Hope Credit. Actually, it's 4 years now. They switched it to 4.
Right.
So I'm still been able to claim it. But I double check it to see if it's allowable for that. But I believe it is.
Okay, other than that, we came up with no problems, what have you.
I
Sarah,
fixed one of your fails because they were the clients that were coming back, the Cicarellos. They came back last night and I fixed the failed. What you did wrong in that one was you failed to enter their 1098 or 1095As. That's marketplace health insurance. You have to enter all that in so that if they are paid, they pay a premium tax. They were the ones who saw the house.
He told me to not put them in or something, because I had to pay because of them.
Well,
usually, if it will let check yes, you got health insurance and let you bypass that, but if they don't let you bypass it, you gotta put it in.
But it asks you, was it bought through the marketplace or not? You have to click yes if they have that paper.
We tried everything, because they had to pay.
Yeah, they had to pay.
But they had zero info.
Yeah.
So
So
we
we
told
got
him
it
to
knocked
stay
down to like $100 and some last night, and he ended up the old bill he contacted them and got that wiped out, I believe. They were unable to pay, so they.
So these people get so much money a month.
So we told him to
paid
do that.
on
We
their
gave him-
insurance.
And then I count, you do some counseling, you tell them different opportunities, things that they can get in the area.
Did Savannah fix my cell phone?
I haven't talked to her yet today.
But anyway, Sarah, is that the enrolled agent test offered this spring?
I'm gonna check. I think it's only like January. I'm gonna check.
So they're offered 2 times a year, spring, fall, I think.
I think the one I would do is the fall, because that'll give me time to study and everything, and kind of relax a little bit after graduation. But that is definitely my plan. And then regardless of job, I plan on doing the tax thing with the portable printer and everything. So,
Now, another thing you could do, I'm sure Bluefield, Virginia, West Virginia, and Princeton all have H&R Block.
yeah, no thanks.
No
No thanks.
You don't want to own the H&R Block?
You have to take their tax course to do it.
Hey, weren't those mad last night?
Oh my God, they were
Which ones were mad?
$11,000 dividends.
Well, he got it. They just reinvested it.
Yeah, that's what I was
Hey,
trying to explain to Cole.
You've got to have a lot of stock value to get 11,000 dividends.
They were getting dividends of like $2,500, $2,600 a quarter, which ended up being 11,000. However, it was reinvested back into the stock, but that's like you getting the money and then putting it back. So I mean, technically he didn't see it, but he did.
He received.
See,
So-
that's like if you have money on savings account and you get interest of $2,000. The bank keeps it unless you take it out, but you still pay taxes on it. Whether you take it out or they keep it. Same thing with
They
dividends.
asked me, they were like, well, what should we do about that? I'm like, I mean, no matter what, you're gonna have to pay the taxes on it.
And if he takes them out, whether they're at a loss or at a
Well-
loss, it'd be better for them.
If you don't need to take it out, that comes up again, they should pay quarterly tax, estimated taxes. Okay, Sarah, let me get class started.
Okay, I just wanted to show you that.
1 o'clock. H&R Block, they've been around a long time, and they are also provide some labs. But yeah, you could fly through this course.
Yeah.
All right. Now, here is the deal, guys, and I discussed this somewhat the other day. You've got a piece of business property, you got a piece of equipment that cost you $20,000. All right, you have depreciation on it of $17,000. All right, your book value is $3,000. Okay, now you sell this for $5,000. All right, now you sell it for $5,000. How much of a gain do you have? Huh? That's book value, selling price. All right, you have a 2,000 gain. But how much depreciation did you have? Any gain up to 17,000 is called Section 1245 property, and you pay regular tax on this gain. Now, if I sold this thing for let's say $24,000, how much of a gain do I have now? I've got a 21,000 realized gain. Now, 17 of that up to depreciation, 17 of it is a Section 1245 property. The other 4, 20 from 24, the other 4 is Section 1231 property, and 1231 property is long-term capital gain. Now, what's the diff there? This 17,000, you may be in a 25% tax bracket, and you pay 25% on it, don't you? But now this $4,000, your long-term capital gain rates are usually 15%. You save money, but hardly ever do you have a piece of property that you sell for more than you paid for it. All right, you got a computer. You got a $20,000 computer. I can't imagine one that would cost $20,000. But how long do you keep that? And it's worth 24. A piece of mining equipment or a piece of factory equipment, So usually you sell it for less than 20, and it's Section 1245 property. All right. So with that, I looked at a little bit of PowerPoint the other day. We need to start looking at, you need to do even solutions. And this is chapter, and we can't spend forever on it. We got to move on. We did a little bit on corporations the other day, just a little. This is chapter 13, folks, individual taxes. So let's look at chapter 13. Now we had a test on 11, 12, and 14. Now, some things come up with Virginia, West Virginia. Now, Virginia is pretty straightforward. They still give you an exemption, and they'll give you a few subtractions. They do not tax you on Social Security.
What is this that I heard that like every Virginia resident is getting so much back in October towards the end of the year? Heard of that?
I've not heard of it.
I've heard it's just like if you're single, you'll get like 110, and if you're married, you get 220.
Huh. Not heard of it. Go ahead and Google it there. All right. Now, West Virginia used to have to go in and click what county they live in, usually, and you live there all year. West Virginia, you get that darn senior citizen credit and that homestead credit. Have you had one of those yet, Cole?
I've heard of the homestead though.
Now, Jonathan, you've had 2 or 3 of those senior citizen homesteads, haven't you?
Yeah, 2 of them yesterday.
Now, Jonathan, you had another. I don't know how that worked out with so many people in there. That same guy you're talking about, he had railroad retirement.
Yeah.
Now, is that not taxed in the state of West Virginia, the railroad retirement? Social Security is, the railroad retirement should be. But now, teachers in West Virginia get like a $2,000 break. So you gotta look sometime at those subtractions, state of West Virginia, and see if you can save them some money. Age in Virginia, I believe you get up to $12,000 extra exemption if you're over 65. I don't know what West Virginia gives on that. Every state's different.
It says now signed into law by the governor of Northam. The new statute will send millions of dollars back to Virginia residents. One of the key provisions, a one-time refund of 110 for individual filers. The purpose of these rebates is to compensate state residents for the higher state taxes they will have to pay as a result of the new federal law.
Okay. The federal law puts a cap on property tax, state income tax. I think the cap is 12,000. That's what that is. Well, good. I'll get back $110. All right. I won't argue with that. Now, that same governor, just about a month ago, was in the news. It was in the news real heavy on abortion. He would say it's okay to kill the baby the day after it's born. And that's late-term abortion, isn't it? So then something else came up about him. I don't know if he was a racist. Something came up about him. He got in trouble again. He got in trouble. And then his lieutenant governor got in trouble for sexual misconduct with some females years back. So if you ever want to run for office, fellers, don't put any nude pictures on Facebook. Don't put anything out anywhere. Don't let everybody know your business. It will come out. Well, thanks for that information, Jonathan. So the rest of you that are video streaming, hear that. All right, I want you to take your textbooks and I want to prove to you what I was telling you just now. And I want you to start on page 5. Turn to page 5. Let's see, Cole, you have at least one of you have a book. All right, now look at page 5, section 1231, property is real property or depreciable property used in trade or business with a holding period of more than a year. That makes it long term. And you got timber and coal and livestock and on-harvest crops. Now, section 1231 property is long-term capital gain. Keep that in mind. It gets one long-term capital gain treatment. All right. Then we've got involuntary conversions, casualties, condemnations, and so forth. And it says procedure for treatment. Now, I want you all to turn to a form in your book. I turn to page 25. Now, let me see if I can turn Gizmo to page 25. Never know where that little thing's hiding at. All right, now, this is the form for section 1231 and section 1245 and section 1250 property. All right, now here, I want you to look at line 6. Then I want you to look at sale or exchange of property used in trade or business and involuntary conversions other than casualty or theft. All right, now this would take trade or business. Involuntary conversion would be fire, flood, hurricane, cyclone, and so forth. All right, now I want you to look at the second page of that form. Now, we looked at this the other day, but I want to look at it again. Don, are you finished with your love letter?
Yeah, number of my pages.
Number your what?
My pages.
Oh, okay. All right. Now look up here, guys, what I've been telling you. We're selling equipment. We sold it for $60,000. Cost was $58,000. Now depreciation was $27,000. Book value or adjusted basis is $30,000. You have a gain of $29,565 to $65,000. Now that gain goes 2 different places. Now first off, all of it may go to depreciation was how much? How much was depreciation? All right, how much is your gain? Now look at that.
2,000.
2,000 of it's going to be what?
31.
You sold it above book value. Yeah. Okay. All right. Here is your gain, right? And here's your depreciation. Now your depreciation is going to be section 1245 gain. Ordinary. All right. And your 2,000, Jonathan said, is going to be long-term capital gain, section 1231. Okay. We'll break that down. Now, look down at the bottom of your page there, Co. Main bottom of your page. If I can get this one to lay over. All right. What does it say to do right here? Total gain, add properties A through D, line 24. All right, add properties A through D, blah, blah, enter here, and on line what? Remember, with this 27,565, 13 should be ordinary income. All right, now it takes out the 2,000. Enter this portion from casual theft on form 4684, line 33. Enter the portion from other than casual theft on form, now remember line 6. Line 6 should be long-term capital gain. So flip back a page. Well, is it there somewhere? It's hard for me to coordinate this thing. There we go. Now, where did we put the 2,000? Do you see where we put the 2,000?
On the gain.
That's section 1231, long term.
And if it was a loss, it would be a print.
Yeah. All right, now where are we putting the 27 something? Down under ordinary. All right, now where do we take this to? All right, where do we take this 27 to? 1040 what?
1040 line 14.
And you're paying ordinary taxes on it, aren't you? All right, but go back up to the 2,000. It tells you where to take it to. Okay, if I can get my gizmo working. I don't know who else is using this. Mr. Lilly said he wanted to use it because he had forms he'd like to show. Now I can write on notebook, and I can use this for a blackboard. I can take blank paper and use it for blackboard. I like Gizmo. Okay. Now read this up here, guys. Where's the 2,000 at? Line 6. Is that your 2,000?
Yes.
All right, but now read line 7. That's your 2,000. Go down there and read where it says individuals. All right, where does it say to take it to? Enter the gain from line 7 as a long-term capital gain on Schedule D, file with your return.
Skip one.
Right, and you entered on Schedule D. Now Schedule D will give you 15% high taxes. With ordinary income up here, maybe 25 or 30%. All right, that is half of the chapter if you understand section 1231 and section 1245. That's half the chapter. But there is something else over here I want you to look at on the form. I want you to look at line 26. Line 26 is in this chapter also. Section 1250 property if straight line depreciation was used. Now, that's for real estate. That's for houses and apartments that you rent. Used in a trade or business, commercial, warehouse, anything. Factory, building. All right, if you use straight line depreciation, you're okay. But if not, there's percentages here we got to look at. And it tells you if it's residential. So 1250 property will be taxed ordinary. And if there's anything over, it goes back to 1231, which is long-term capital gain. So, but there's tricks to this 1250 property. All right, now we're going to go back in your book. I want you to look at page 8. All right, I want you to look at examples 16, page 8. The following gains and losses pertain to Danielle's business asset that qualifies as section 1231. He does not have any non-recaptured losses from previous years. Now, remember, Savannah had a piece, and Sarah was working on a man's return last night. He sold a home in 2015. He used it for business purposes, not his personal residence. He inherited this home. Now, I don't know who did it in 2015. On his H&R Block, and he took it to some other tax preparing company. His basis, he had to find out how much the house was worth. But bottom line, the man took $107,000 loss. Okay, he took $107,500 loss. Now, I can't help how it was done in 1915 or 2015. Savannah's looking over that. But they gave him $3,000 long-term capital gain. You only get $3,000 a year. That was in 2015. All right, that left $104,000 to carry over. So hopefully somebody gave it to him in 16. If you don't use it, you lose it, unless you go back and do an amended return. That left him $101,500. Hopefully in 2017, somebody gave him $3,000 more. That left him $98,500. I told Sarah last night for 2018, give him $3,000 of that loss, and that will leave him a $95,500 carryover. Okay? Now Sarah had to go in and plug it in Schedule D as a carryover loss. And that $3,000 if you're in a 20% tax bracket. What's 20% of $3,000? I believe it's 600, John. You would check me out. All right. So Jonathan and Co. This little jump drive, jiffy drive, whatever you want to call it. This has solutions in it for 3 textbooks in my class. It has PowerPoint for 3 classes. It has test banks for at least 2 of my classes. I have probably 10 tax returns on here, where I've probably got Mount Missouri, 4 or 5 years tax returns on here. And I've got some solutions for old textbooks, PowerPoints for old textbooks. So that holds a lot of stuff, don't it, Code? Smaller than your brain too, isn't it? I hope too. All right. I guess what I'm trying to say, I don't know how many gigs it holds, but your brain has unlimited gigs. Now I can add some more storage to this and we'll soon fill up, won't it? Your brain will never fill up. So you have unlimited capacity for learning. You should learn from the cradle to the grave. That's from the womb to the tomb. All right? Don't ever quit learning. Put more information in your storage space. All right? You have unlimited capacity. All right. But anyway, had we done his return last year, or in 2015, it would have automatically carried over 3,000. But since we didn't do it before, IRS's tax program, the one we're using, it don't know to carry over 3 unless you tell it to. So taxes, if anybody advertises they're an expert, somebody should take them to court. There's no experts, 100% experts in taxes. If somebody guarantees a refund, they are tax fraud right there. You can't guarantee refunds. Okay. So I have taught taxes 50 times. I went to many seminars. I had corporate tax classes. and individual tax classes. Uh, I've had tax practice for 2 years around the clock, during tax season. I've prepared taxes for 50 years. Okay. And I don't know everything about taxes. Now, when Trump up and changed the laws, there's new things to learn, isn't there? Now, it's not that you know everything about taxes, it's knowing how to find an answer. Okay? Whether you look in this book or whether you go to irs.gov, they sent us 2 publication 17s. Now, if we were doing tax research, I'd have to have the tax library, which probably would fill up this room. If I had a shelf on the wall, it would fill that shelf up. That tax citators, whatever they call them, it's the IRS code. It would fill up from here to at least 2/3 of the room with big books of tax law. And that's how we'd have to do tax research. And see if there's been any cases tried in any other states or courts that you could use. So, yeah, when there's that much stuff about taxes, about 50 volumes of books that thick, it's hard for one person to say they're an expert. All right, but we do enough to get by with the basics. Now, finish looking at this exercise. Example 16, we had gain due to an insurance reimbursement for damage, loss due to condemnation, a gain due to the sale of Section 1231 property. All right. Now, the 10,000 casualty loss is classified as Section 1231. That's the first part of your form. Danielle has 32,000 of Section 1231 gains, and 19,000. How'd you get 19,000? Yeah, it's up there. Danielle's 13,000 net Section 1231 gain is treated as long-term capital gain. All right, and then we'll go on Schedule D. So that was an easy example. Now down at the bottom of page 8 is recapture provisions of Section 1245. And that's the part you pay ordinary taxes on. But I want us to go over to page 1310, bottom of the page. This is real estate. Now we're going to look at real estate for a few minutes. Now Tuesday we're going to take half the period to look at some problems in chapter 13. So try to work some even problems. And we're going to hit corporations, chapter 2. Start reading chapter 2, ignore chapter 1. Because it's just law and background and legislation. All right. You folks out there watching or listening, we need to learn something about Section 1250 if you sell real estate at a gain. Now, we'd appreciate real estate. Now, when you go to those real estate tables, what page are those real estate tables on in the back of your book code? What pages are any of the tax tables on? I'm not having any luck. Those depreciation tables, what we're looking for. Found the tax rate schedule.
Yeah, residential rental real property.
Yeah, what page is that on? Index what?
C.
What?
C stuff.
T?
C.
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 I'm way off. I'm on T. Well, I can't find C. Anyway, I'm going to take your word for it. Let me see that just a minute. Let me put that under the microscope up here for a minute. All right, we looked at these back on a chapter on depreciation. I don't know if I can, well, let's see. I set my gizmo there. Now, we're depreciating property for 27 and a half years, aren't we? That means 28 years. Did they not change that after? Is that the newest one? After 86? Now, non-residential's on the next page. It don't matter if it's residential or non-residential. Now, okay, after 93 is our next best spot right here. Now, how many years is that good for? 39? All right, 39. That's non-residential. This might be a commercial warehouse. All right, you start your first month. If you bought this thing in May, you get 1.605. But for year 2 through 39, what rate do you get for the month of May? 2 point what? That's straight line. That's what it is, straight line. After your first year and your last year, which is your 40th year, it's straight line. So that's what section 1250 probably is talking about, straight line depreciation. Now, if you had real estate that you claimed some of your digit on, or double declining balance, some past years, and more of that may be taxed as ordinary. All right, so look at the bottom of page 10, part of page 10, recapture provisions, and look at your blue pages over here. Section 1245 affects the character of the gain, not the amount. Section 1245 is ordinary. Now, when we get down to Section 1245 does not apply to any building placed in service after 86. So now we're down to Section 1250. Look in the middle of page 14. Section 1250 has the effect of converting a portion of the Section 1231 gain into ordinary income when real property is sold or exchanged. Now, let's look at real property. I want you to look at an example on page 1313. Example 29. Aaron, whose tax rate is 35%, owns an office building purchased for $1 million on April the 10th of last year. Now he's only got a few months depreciation, right? All right, now he purchased on April the 10th. The building is sold on March the 28th of the current year for $990. When its adjusted basis is $966,850. All right, he has a gain. He took a lot of depreciation. The gain is net Section 1231 gain, and none of the gain is unrecaptured. Section 1250 gain because the holding period is not more than 1 year. All right, the 23,150 gain is ordinary, taxed at 35%. If the holding period was for more than 1 year, the Section 1231 gain of 23,150 is long term. That is uncaptured Section 1250 gain at 25%. So this example is not good. We know 1231 is long-term capital gain, 1245 is ordinary, and 1250 is ordinary. It's not making that clear. All right, we're gonna have to get a better example. May have to wait till we get a problem. All right. If you look at page 17, Cole, are you on page 17 yet? All right, good. Now, Jonathan, did Sarah say she got one of yours straight or one of Cole's straight? But you still got one reject?
Yeah, I only have one, but I don't know if Savannah was home.
See, when we leave here in the summer, there's nobody here for these people to holler to. And once in a while in the fall, they'll holler at me. They need a copy of their return. They lost it, and I'll mail them one. Well, they'll come in and get one. People don't keep up with their stuff. But usually we don't have any problems during the summer or anything I have to take care of. Well, we have no rejects. If it's something we flat out can't get done and keeps rejecting it, we just mail them a copy of what we have, let them mail it in by hand if the program rejects it. So we take care of them somehow or another. But I want you to read this page clearly down to the bottom of page 17. Equipment. All right. Now, what's its base in the land? Its base is 400. Adjusted base is 400. Now, I want you to look at the top of this. The tax rate who sells each of the first three assets for 450. Each asset is purchased 97. The difference between the ordinary base and the adjusted basis of the equipment building is attributed to depreciation. There are no other gains or losses. Now look at that land. If you sell land for $450,000, how much of a gain do you have? Now, when were these assets bought? First off, look at your blue page there.
1997.
Well, it definitely makes it long term, don't it? So if we have a piece of land, like we learned in other chapters, we paid $400 for it, its adjusted basis is $400, and we sell it for $450. We've got long-term capital gain right here. Long-term capital gain. And the tax rate is what? All right, now, that has nothing to do with this chapter much. Now, let's take equipment. All right. Its original base is how much? Its adjusted basis is 400 after 200,000 depreciation. And we're going to sell it for 450. How much of a gain do we have? $50,000. And it's going to be ordinary income tax at what rate?
35.
All right. That's the difference between 1231 and 1245. All right, now going on down, here's a building. We paid 500. We had 100,000 depreciation. Its worth, book value is 400. We sell it for 450. So where are we going to put that 450 gain? 1231. But that tax rate is what? Because it's real estate depreciated by the straight line method. One of those tables in the back of the book is straight lines. All right, we've got three tax rates. Which one's the best? 15%. Which one's the worst? 35. Now, if we sell building, we're going to be taxed at 25. Now, however, keep in mind, if you were in a 10% tax bracket, that's all you pay is 10%, not 15, not 25, not 35. Let's say you were in a 20% tax bracket. You pay 15, you pay 20 and 20 on the other two. You never go higher than your tax bracket. Never. But if your tax bracket's 30%, definitely you want the 15, don't you? If your tax bracket's 30%, you want the 25. If your tax bracket is 30%, you don't need to take the 35, do you? You want 30. Okay. Now, for assets 4, 5, and 6, assume the selling price is 700,000. All right. Its basis is we have 300,000. It's going to be section 1231 gain. Equipment. We have 300,000 gain. 200,000 of that depreciation will be section 1245, and the rest of it will be section, that's like the example I put on Notepad. Now the building. 300,000 is going to be long-term capital gain with 100,000 of unrecaptured section 1250 gain. Now, this little chart takes care of all the 3 types of gains. So please read that page. That is the best example I have seen of these 3 in any book so far. All right. Rest of the chapter we will look at. We will look at that form. Please start doing the even problems. All right. And you've already been to the job fair, so I'm not going to ask you to go again. Yeah, go do that. Yeah.
I'll build this one up.
Okay, so we will call it a day and get you out of here. Y'all hear what Sarah wanted to do? Well, she passed the enrolled agent.